How's it going, folks? I've been getting a lot of questions on how JEPQ compares to QQQI and also GPIQ compares to QQQI. While I did do a video comparing GPIQ and QQQI, I haven't done a video comparing all three all at once. So let's do that. Let's compare all three assets all at once and also compare them against QQQ, the base asset. Let's do it. Okay, guys, firstly, welcome Robert and Sandra to the Patreon community. It's so good to have new Patreon members. Thank you for supporting the channel, and really, I can't appreciate it enough. And if you'd like to join, we have two tiers. We have an elite tier where you get the one-on-one coaching, or the entry tier where you can get access to the calculators, and you also get access to our community chat room. So please, if you'd like to join the Patreon community, it does go a long way, so I appreciate it. All right, guys, so let's just jump right into it. And today, again, as I said, we're going to compare QQQI to JEPQ and GPIQ all against the base asset, which is QQQ, the NASDAQ 100. And right off the top, what I will say that isn't reflected in this comparison is going to be the tax efficiency that you're going to get with QQQI, okay? With QQQI, you're getting almost all of your distributions paid back to you in the form of return of capital, or ROC, okay? Now, this is just a tax classification. This isn't your assets being returned to you, okay? So the return of capital is effectively the income, the dividends, the interest being paid to you and classified as return of capital so that they can reduce your cost basis of your asset and effectively you don't have to pay the tax when you receive the income. You have to pay the tax once you sell the asset entirely. So it is a very efficient, unique strategy to approach taxes as it relates to an income fund. And JEPQ and GPIQ operate a bit differently. I believe GPIQ may have some return of capital, but not full, and JEPQ certainly does not. So 1 point already goes to QQQI alone for just the tax efficiency and the ability to earn tax-free income until you effectively sell your base assets. So 1 point already goes to QQQI, okay? Now let's look at the price action. Let's look at the price return over the past year of QQQI versus JEPQ versus GPIQ, all centralized around QQQ, okay? So we can see that QQQI did a 5% price return over the past year, JEPQ 3.8%, and GPIQ did lead the covered call ETFs with 8.75%. QQQ, of course, is not going to be a dividend player. All the value primarily is going to come from its appreciation, its growth. And so with that, you're going to see 20.92% on the base asset of QQQ. Of course, with these other assets, we're seeking income, right? We are seeking income while trying to match the returns of QQQ. We want to get as close as we can to QQQ, but in the form of income, to the opportunity of dripping or the opportunity of taking some of the income to live on, right? So the benefit of these assets is going to be its income generation. So let's look at what that looks like. I'm going to go down here and look at the dividends, and then we'll look at the chart for total return. So QQQI, its dividend yield over a trailing 12-month period is almost 14% at 13.78. Okay, JEPQ 11%. GPIQ 9.82%, and of course QQQ is not really a dividend player at 0.49%. So of course QQQI wins the race in terms of its dividend yield, right? And that's what kind of we're looking for. We're looking for an asset here that's going to grow its NAV, increase its price while offering a very attractive dividend yield. And the best one of the bunch is QQQI, okay? Next, let's look at its expense ratios, okay? So this is where QQQI actually is the weakest. So its expense ratio, or its management fund expense ratio, is 0.68%, right? Versus JEPQ is 0.35% and GPIQ is 0.29%. QQQ isn't so amazing as well at 0.2%. But really, as we looked at before, like we saw, it's the dividend yield against QQQI or for QQQI. You saw how it's much stronger than GPIQ and JEPQ. And so I'm okay offering an extra 0.3% to get that incremental 4% in dividend fund and dividend yield rather per year. So I'm okay with this slight increase relative to the others because of the yield payout. Now the moment of truth, really. From a total return standpoint over the past year, which one has done the best? Well, QQQI has done 21.29%. JEPQ, from a total return standpoint, right, and the total return again is the price appreciation plus its dividend yield. JEPQ has done 16.4%, GPIQ 20.82%, and the base asset of QQQ to 21.6%. So what comes closest to matching the total return of QQQ was QQQI, okay? Very, very close, just off by 0.4%, and that's amazingly healthy. Ultimately, all of these are a nice place, and you can see how really it's phenomenal to see how covered call assets are tracking against the index, and they recovered just the same, within reason, and really have shown a nice ability to maintain the same charting that a QQQ is showing. But ultimately, we want to, again, be as close as we can be to the base asset when it comes to these covered call ETFs. So what's the base asset? 21.6% in terms of total return. And what comes closest? It's QQQI. Now, there might be an argument for GPIQ if you want a little more balance between price return, price appreciation, and yield. But you can always just buy the base asset of QQQ. If you want growth and price appreciation, buy the base asset and let QQQI be your income workhorse, right? That's what it's all about, like income for these assets, right? And that's the income you can use for living. That's income you can use to reinvest and use that as a flywheel effect, right, against the asset. So in my opinion, again, not financial advice, but in my opinion, the numbers speak for themselves. QQQI is the clear winner here and should still be the winner over a long period of time. So I choose QQQI as the strongest dividend workhorse in this case. Outside of that, guys, that's pretty much it. Here's the thing about it though. QQQI is fairly new. They're newer to this equation. They've only really had a year and a half history. GPIQ has been around a little bit longer. So is JEPQ. But all things point to QQQI being able to really stay aligned and pinned to QQQ and maintain a NAV growth while yielding the strong dividend yield. So all signs point to everything looking favorable for QQQI. Okay, guys, what do you think? Do you like QQQI? Do you prefer JEPQ or GPIQ because they come from more well-established names? Or are you bought into QQQI? Let me know in the comments below. Sub to the channel, comment below, like the video. And outside of that, guys, all the best. Have a great weekend and cheers.